Welcome back to the big long here. While we get weighted and situated for inflation data, a few things I'd like to go over. So, what I found really interesting is how lithium and uranium are taking off. And that's something that comes down to the infrastructure bill. So I brought up yesterday how Afghanistan, right, is one of the largest producers of lithium. And in the infrastructure bill, well, this isn't in the infrastructure bill, but for rare earth minerals, I mean, we have imported them from China. So 80% of that coming from China is crazy, and this is why I brought it up. Why? Because when we get into the charts, you'll see what I'm talking about, what happened specifically on August 11th. Now, uranium kind of took off the past few days due to um, uh, Biden and everyone coming out saying that nuclear energy could be coming back. So that's just something to be mindful about, and we'll go over both those sections. And right now, what I just wanted to get into was pretty much paying attention to the news, right? So you had Litecoin, right? Walmart came out yesterday and said that they had a partnership with Litecoin, boosted Litecoin all the way up, and then a massive pump and dump ASAP. Unfortunately, I don't have a chart to pull up for that, but that is something that's very bullshit. I mean, why? Because how can a company come out and say that they made a partnership with that, and then Walmart could come out and say that it was fake? And CNBC also was not instigating it, but they promoted it. So the fact that they promoted it, right? I mean, that just shows you what kind of company they are. They're just looking for that quick in and out. And I mean, it's just it's tough. But this is why you don't have to be the first one in. So today you have an Apple event today. Believe they're showing the new iPhone, or it's about their they're showing their new iPhone today. But sorry, this messed me up. I didn't see this. After spyware flaw. So that's something I didn't get to read yet. This obviously happened yesterday, as well as Intuit to buy MailChimp. So that is something that I will be looking at as well. So AMD is supposed to buy out Xilinx. So that is also another thing. And now as we get into it, the reason why I bring up lithium is obviously I touched upon that, but it's a huge thing. Lithium is the biggest component for EVs. So the fact that Biden wants to make 50% of vehicles electric by 2030, this is going to serve China's economy pretty well now, since, like I just pointed out, 80% of our rare minerals have come from China. Kind of crazy, right? So this is a ETF LIT that I'm looking at. When you get down to the nitty gritty, its NAV of 1 year is 130 and 10 years 7.82%. So this is net asset value, the market price up from that time period, as well as the sector and the country breakdown. So this is as of August 31st, right? 2021. So the sector breakdown has materials, industrials, IT, consumer, financials, yep. And then the country breakdown, 50% of it is China. So 50.5% is China in this ETF, which is crazy. And then obviously you go through the top holdings and see what is being held there, but just this goes to show you how big this really means for the trade of importing and exporting. The thing is the paradox, the green paradox, right? Like the mining and everything is so bad for the earth. We could get into the nitty gritty and have those arguments, but this is strictly about making money, so no reason to get into that. But the fact that they wanted to increase supply domestically and then shit hit the fan and they couldn't because it was hypocritical to what they were trying to do in terms of green energy. So there's a lot of things that go on behind the scenes that we don't necessarily don't know and we'll never know, because it's kind of weird how this came out, I believe, August 12th, right after Biden gave his speech on the infrastructure package, explaining what it is and what it will consist of. So then it gets into the pullout of Afghan, leaving everything there, right? And then Chinese pretty much sneaking in the back door and mining that lithium. Now, they could be in cahoots with the Taliban or whatnot, but get you thinking because of XI and Biden speaking on Friday. So that shows a lot, and it's pretty much just following those big topics. So what's interesting is the options play. So there's a few options like ATER. ATER closed at $17.98. It actually hit a high of like $19.91 in the after hours yesterday. And someone's making a bet that we are going to see a decline this week, right? But then what happens is someone came around and bought a call, right? But this is 1750. That wasn't the one that I was necessarily trying to bring out. But okay, a $20 call at this week. Where is... Alright, well, before I get the ATER one, we got AMC here. So we have a put and a call. What this is telling me is they're hedging, whoever bought these are hedging their play. They don't know what necessarily is going to happen. So this is something that I am going to keep my mind out for, because are they expecting it to rise and then drop, or are they just not knowing what AMC is going to do? I mean, it's a hard stock to predict, right? So as we get into it, here we go. The $48 put for AMC for September 24th. So not this Friday, but next Friday. So it seems like we're experiencing some uncertainty of where this is going. But let's just be mindful that, what is it? Open interest, right? So open interest here is 2,300 with a volume of 27,000. So this is seemingly pretty bullish, while the put, not so much activity going on there. So this is telling me that we're definitely, or could definitely see a push to 53, if not higher. But then after that, supposedly someone thinks that we are going to be seeing a little pullback before the next run up in AMC. So that's something to be mindful about as we inch closer and closer to that expiration date. So what I will do is I will actually search this one because I don't know where it went. Okay, I can't do that. So what I'm trying to find is the put that was made for ATER. I wonder if I click on it, if I'll be able to find it. Alright, so looks like, alright, so I should have just screenshotted that. I can't find that option. So that's what I'm looking for in the option area as we get situated here. The put was for November, so just to, if we were to go back to the options real quick, I apologize for not having that up. So we have a put here of a strike of $12.50. So that is something to be on the lookout for as this expires this Saturday. And then the other option was a call out in November for it reaching, I believe it was like $15. So there we would see a slight pullback before it has the next run up. So that is something that I'm paying attention to, as now the total put to call ratio is over 1, and that's something new, as the index put to call ratio rises to 1.93, and then the equities are still slightly bullish, crossing that $50 mark. So a few ways that you might want to think about hedging is the inverses. So the reason for this is the big long, right? So I only buy, I go long. And what you could do is, for instance, like hedging against tech right now. So when we go over the Nasdaq, I'll explain what we could do. But this is for education use only, as well as entertainment purposes. So next we also have uranium ETF. Now, because of people coming out and talks about nuclear energy coming back, uranium actually has been seeing some high option play. And as we scroll down, we'll be able to see how the year is, right? Market price. Whew. And then also the sector breakdown. So country breakdown is really controlled by Canada with 49.6%, and then we are pretty much what, 7th, 1, 2, 3, 4, 5, yep, 7th with 5.2%. So something to be mindful about. I mean, ETFs are good when you just want to dollar cost average and like go long term instead of short term. Don't get me wrong, you can go short term, but I look at ETFs as a wealth building investment, not something that you trade. If I trade it, I'd probably buy options on it. So that's something to be mindful about. So now let's get into stocks. So we have the S&P coming down, touching my upwards trendline support area. So this is going to be crucial if we drop below this 4447 number, right? We're looking at probably retesting the 43s. Now, who knows how fast that will happen, because we might just retest the 50-day moving average. As you can see, the 50-day moving average since February, January actually. So all of 2021, you could see when the market or the SPX has touched the 50-day or had a slight breakthrough, it has come back over the 50-day moving average every single time. So what we're looking for is support to hold at this level. Now, are we going to drop there? Who knows? Maybe we have a bullish move upwards, and that takes the cake away from what we want to do, right? So that's something to be mindful about when when you're looking at a chart. Is you need to know your areas of support, and you need to be cautious. You never have to be the first one there. So ever since the all-time high, it has been declining, and then the momentum is looking like it's going to cross over the 20-day moving average, heading towards that 50-day moving average. So this would be a pretty big drop if we do touch that 442 number here on the 50-day moving average. So that is definitely something to be mindful about at this point in time. RSI is healthy, but the MACD is signaling a bearish reversal. So to me, that is something that I am going to be cautious about when looking at it. So let's get into the futures. So same thing with the futures, right? So looking at the future market, every single time it has touched the 50-day moving average, it has bounced back. Open interest now actually declined, and then every single dip it declines, right? And then pops right back. So what this is telling me is people are selling and exercising options if they're long right now, so that they're profiting both ways, right? And to me, it's not necessarily shady or wrong, but people aren't always going to tell you what they're doing, right? Especially the ones that we all listen to when it comes to the media and public, right? So futures, you could see that, was this the 13th? We almost coming down and touch the 50-day moving average. So what I would like to do is zoom into the 4-hour. So 4-hour, we actually crossed over the 50-day moving average. All of them have crossed over, and it seems like the 50-day is going to keep on pushing towards the 200-day moving average. And when the 50-day crosses the 200-day moving average going downwards, that is signaling a death cross. So the death cross is when, for instance, the stock price is trading below the 200-day moving average, and the death cross gets its name because when the 50-day crosses the 200-day, that is a sign of a bearish trend. So investors seem to take profits at that point in time. And see, this is where, for instance, I utilize what I do, is because the 50-day actually crossed up here around Wednesday the 8th. So the fact that the 50-day crossed all three on the 8th, that's showing me that momentum is going downwards. But obviously when we zoom out, the 50-day is still below. But what you have to be mindful about is all the other signals. So the fact that my short-term EMAs are moving downwards seems like we did catch support at 4435, but we just got to be cautious about a false breakout, because today, depending on inflation data, we could see a pop and then quickly come right back down. So definitely going to keep an eye on this as we head into the NASDAQ. So NASDAQ yesterday, we could see touched the 20-day moving average. Same thing almost as the S&P. So you could see we broke out of this resistance area on August 30th and then touched all-time highs, and actually been declining ever since, touching this 20-day moving average. Hopefully we see a bounce, and if we don't see a bounce, I mean, same thing, we could see a drop all the way to 15,118, and that's like, I feel like maybe pushing it at this point in time. Looking at levels first, so like this resistance area. So resistance typically comes support, right, when it's broken. So I will be looking at 15,201 as support area. So that's still a pretty high drop off from where we're at right now. As you could see, we actually closed at that previous breakthrough of resistance, right? So this is what I mean, that resistance becomes support. So I wouldn't get too worried at this point in time, as we need to see what today has in store for us with inflation, because right now it's been bad news is good news for the market, and good news is bad news for the market, and bad news is great news for the market. So now the E-mini 100 for the NASDAQ. So futures again on the daily, right, touching this 20-day moving average, consolidating as momentum seems like it's shifting downwards. But like I said, we might have caught support at that previous resistance level of what, 15,443. But obviously we're a little lower than that. That was the high. So this is seeming like support at this point in time. Don't know what's going to happen when the bell opens, but if we do come back down and retest the 50-day moving average, we're looking in for one hell of a drop. So this is something to be mindful about. So what I would like to get into is how to hedge against tech right now, because what you can do is you could buy TQQQ puts, right, and that's a leveraged index, or you could buy calls on the SQQQs, which is an inverse, and that's pretty much what I do. I buy inverse calls or stock, whatever, however you would like to call it. And then triple Qs, you could put a put, and that's pretty much just big tech, you know, the top firms of the NASDAQ. And then you have the XLK, which is a tech ETF. You could buy puts on that, as well as the semiconductor ETF, which is SMH, and then IGV, which is the software ETF, as a put. Or in general, you could just sell covered calls if you're trying to raise cash if you already made a profit. So those are some ways that you could hedge against tech, right? Because in this environment right now, as interest rates are low, tech is a growth play, and that's going to be your main big winner in the long term. So got to be mindful about that. And now let's look at the triple Qs. So triple Qs, momentum is heading downward, so definitely looking to test that trend line. Was this the 50-day? So the 50-day is actually in line with the trend line that I created. So if we do see more momentum on the downside, we are definitely going to test that $370 range. But right now we're testing the previous high from like 7 days ago, so that is something to be extreme. Well, 7 trading days ago, right? 1, 2, 3, 4, 5, 6, 7. Yep. So that is something to be considerate of as momentum is shaping downwards. So as we await for inflation, let's see what gold has for us. Alright, before we get to gold, I don't know why I had drawn a blank on gold. So apologize about that. Alright, so we have our daily time frame on gold. As you can see, we have high resistance up here. So by this topping at what, 1900, right? So we topped out at 1900 as we're waiting for inflation, but gold created a bear flag right here. So a bear flag is the opposite of a bull flag, right? So we've been seeing, or I've been drawing a lot of bull flags, but this is a bear flag. So this is what's tough about not knowing certain strategies, right? Or just indicators, because this is a huge move, and this is waiting on the dollar. And what's the dollar waiting on? The dollar is waiting for inflation data to come out. And then also with gold is pretty much the arch nemesis for gold is the 10-year, because that will have a price impact on the dollar, as well as showing where the near future might be in terms of rates. So with this bear flag forming on the daily and inflation's coming out, we're going to go over the dollar, but this is something to look out for today. As let's pull up the Dixie. All right. Wow. So Dixie back here, we had a little cup and handle form, and then it's been upwards and onwards, but we have it rocking this upwards support right now, trend, right? And the 50-day actually crossed over September 1st. It crossed over all 3 of my momentum indicators. So that is something that I was and am paying very close attention, because if inflation data doesn't come out hot, I want to see how the dollar will react, which will ultimately move gold as well. And that's going to be a key indicator for the economy in terms of where we're at in recovering and where we're going. So if we scroll or zoom in a little bit, okay. So on the 4-hour chart, you see the bearish signal right here, which the 200-day actually crossed over back on August 27th. And then you see it starting to inch its way back up. A double top happened right here, as this seems like the resistance area at this point in time, $92.78. So when inflation data comes out, if CPI runs higher than expected, I could see the dollar going crazy, and that is going to move gold. If inflation comes out hot, gold is going to rise, as the dollar will actually rise because of that. And if that does happen, the next thing that we need to pay attention to is drawing blanks on these. I apologize. So oh wait, what am I doing? TNX. Yeah, TNX. Alright, so with the yield on the 4-hour chart, you can see that it's been trading low ever since, and now it actually had a false breakthrough. When was this? September 7th. So September 7th was what, last week, right? So that's interesting to me, because what came out last week on the 7th was the auctions. So that is why the 10-year bounced up, because the auctions were hot. And then, as you can see, we came back down, retested the 50-day moving average, it held as support and bounced up. So if inflation comes in pretty hot, I mean, interest rates, if they rise, right? If interest rates rise, that's good for gold, but bad for the economy itself at this point in time. And the reason is because of the impact on prices that consumers have to pay for everything. And if people aren't working because of the job openings and employment rate, and you got the Delta variant, along with all of this other crap like tax child credits and universal basic income. So why work if you could just make money by not doing anything, right? So this is something to be mindful about. You can't just buy everything on credit cards. You need to make sure that you are situated with cash, because you never know what can actually happen. And the CPI comes out at 8:30, so that is something that I'm going to look forward to, as from a year-over-year perspective. August 11th, when it came out, rose to 5.3% or 5.4%, I'm sorry. And we are looking at CPI to slow down in August only by 0.3% we're looking at right now. So if it does hold up 0.3%, who knows? I mean, last time this came out, it was 0.3%, and we're forecasting it now, but that was because CPI came out hot then for July. So this is a little lagging indicator, and this is why, if you're not paying attention to the everyday economics of everything, you could be too late when you think everything is okay. So US 10-year, if this does pop, definitely going to be paying attention to gold and the dollar as we head into this inflationary realm, aka stagflation. So I got a few more minutes here, and what I want to go over is the ETFs for lithium. So what's awesome about this, right, is lithium hit a high on August 11th. And it hit a high on August 11th. Why? Because Biden announced the infrastructure bill and everything about minerals and stuff. So since this is an ETF, right, and I showed you the structure of this ETF, let me find it real quick. So I showed you the structure of this, right? China, 50.5%, right? What's the biggest asset? 48.2%. So it's only 1.8%, let's call it 2.3% less than a percent of assets controlled by China. That's kind of wild. China is one of the biggest mining countries in the world, if not the largest. So that's something to be mindful about, because that's huge. And the fact that it happened on a day where he gave a speech on how he wants to make domestic supply, increased domestic supply, is kind of ironic. So once it hit that high right on August 11th, it's dropped. And this definitely has some impact to do with the Afghan pullout right here. Why? Because I believe he pulled out on the 16th. Because this was the 13th, so yeah, the 16th was a Monday. So I believe he pulled out during the week, and as you could just see, ASAP, as soon as that happened, lithium went down. Why? Because sophisticated investors knew or know what was going to happen. And now you could see it found that support area, right, at what, $78? Or if you want to call it $79. It's been trying to get over resistance at that 86 mark. So if it pushes over 86, I'm going to look over this. As you could see from May of 2021, it has been soaring. So this is nothing. This is nothing to worry about, as the momentum it's consolidating at this point in time. So I mean, this could be a double top, but at this point in time, I'm not really sure, because lithium is the main component for electric vehicle batteries, and you need it. So right now it's up. It's going to open up higher. So right off the bat, this is why I'm saying I don't think that's a problem. So if we definitely break through that 86 level and close above 86 level, we'll definitely retouch that high of $87.48. Options market have been crazy the past few days on this, since it hit a high here. Options have been people have just pressing the call button. So this is an ETF that I am watching out for my long-term investment, as well as the uranium one, which I think is what? I think it's URA. Yep. So another one, URA. So ever since, was it August 31st? So yeah, with nuclear energy, right, coming back, this has been trending upwards, which is absolutely wild. and this was August 31st, and I'm trying to see if there is anything on it. Okay, so yeah, clean energy bill passes. Byron nuclear power plant saved. That was 6 hours ago. I'm sorry, 16 hours ago. So uranium is used for the nuclear plants, right? So ever since they came out and said that uranium is going to be making a comeback, prices have soared through the roof for uranium. As you can see, it went from $17 all the way to $28.85 this morning. So going to be watching this today as well. And another thing that I want to bring up is the stock that I've been watching to get into for some time. This is for my long-term play, and I'm pretty sure they had news come out today. Yeah, so they had news come out today about supplying 154-ton fuel cell powered hydrogen trucks to Australian subsidies of Korea Zinc. So that is why the stock is moving at this point in time. As you can see, now we got a nice little bull flag forming here. So I'll probably be pulling the trigger on this investment, as we have a nice cup in hand on the day chart. So this is getting ready to set and explode. Now I might buy options on this, might not. So the fact that the 50-day moving average, all three of my momentums have crossed over that. Now Hyzon hit a high of $19.95. So I mean, we have a long ways to go to get there. And looking at it, I mean, $10.64 at this moment. Things could get wild for that, as the RSI and volume oscillator pushing higher. MACD is showing that it is strong right now. I mean, you saw a little dip here, right? But it wasn't anything crazy. I mean, profit taken. If you got in here, right, and the stock went all the way up here, you know that that's resistance. So why not take your profit there and then get back in, right? And until this breaks that, I probably won't get in. So looking for this to hold, even though I believe it did. High was 10.38, closed at $10.35, so that's good, but I don't want a false breakout. So what you should be doing is zooming out on the longer time frames. And that's because if the longer time frames trend is true, there's a good shot that the short trend will stay true, no matter if you see a bearish signal in the short term as opposed to the long term. So the weekly hit a low of $6, right? And then it's been on a tear ever since. And we have my momentum EMAs making a bullish move upwards. So this is good. And I'm looking at this week to close above this resistance area. So if we close above this resistance area for the week, or possibly if we make a big move upwards, I will definitely be pulling the trigger for my long-term portfolio. So next, what I would like to get into is ATER. Brought up the options, and this is going to go, like I said, so this is going to have a extreme pullback, and then it just might make a move higher. So looking at, we broke out this wedge, right, and it's been on a tear ever since. So right now we're at what, $16.80. So we're about to gap down at the opening bell. So that is something that is not worrisome, but you gotta know when to take your profit and what not. So what bothers what is actually keeping me in this play right now, I got in at $14.93 yesterday, and I will pull up some 94. So I'm down 260, because I was lazy yesterday and I didn't look. But I mean, this I can't show. I'm not going to show my option call, but my options are up a lot, about 2 grand or so. So this 346 is really nothing. But come market open, not we don't know what will happen for sure. So if this holds as support, then we're looking at probably a bullish move upwards. The MACD looks like it's not slowing down, but the RSI is oversold at this point in time. So to break it down a little more, you have to see where this support could hold instead of, because the long-term trend, right? So if we want to zoom out, let's zoom out on the weekly. The weekly just had a MACD reversal, and the RSI is so low still. So we're just recapturing the 50-day moving average, and that was this week. Yeah, that was this week. We just recaptured it, and we closed at $17.97 or 98 cents, and the 50-day moving average is almost around there. So that's pretty close, and that's signaling a bullish momentum move. And honestly, I mean, who knows what could happen? We filled the gap right here. We filled that gap, and we have a long ways to go. This could be a huge short squeeze. I mean, the fact that I've been trading this for a few days, like I've been trading this since, yeah, the last 2 weeks of August, and it's just been going upwards. So I'm taking short-term profits off of this, and I'm being mindful of when I'm getting in and getting out. Yeah, like I got in here, but this was because of, oh no, I didn't get in there, I apologize, the last week of August, because I wish I got in around freaking $3 to $6, but I was around the $9 range until I sold last week, and then all of a sudden this week I'm like, yo, what am I thinking? So I got back in because I was able to make sure that all my technicals were lining up by simply zooming in. So this is what I mean by making sure that you know what you're doing, is because the fact that the weekly, right, the weekly is good, and the weekly is showing a strong bullish reversal, and then the daily, right? So when was this? This was August 24th when I said I got that week that I got into it, right? And then August 27th it pops. So I got into it on August 30th, and I held because I figured this would be support once a new high is formed after a downtrend. If this holds as support, that's a good sign. So held as support for a few times, and then on what, the 1, 2, 3, 4, 5th, 6th day we had that big volume breakout pushing the stock higher and higher, and we crossed the 50 and trying to make a move to the 200-day moving average here. So this is going to be beneficial as this short squeeze plays into effect, because this has gotten a lot of chatter on social media. So definitely paying attention to this, as well as AMC is another one. So AMC at $51.42. So if I zoom out here, because those lines look stupid, you'll see, oh, did I go to the monthly? Is that where I made them? Yeah, I made them on the monthly. So that's terrible. I haven't fixed that. So let's go to daily, and I'll fix that stuff right now. So I should have just left it right there. Why? Because that was signaling the support line being broke, because if we pop through here, we would have been okay. So right now what I'm looking at is AMC to break and hold above 52, because we have this gap that we need to fill right here, and we did a good job the past 2 days of filling it. So if we hold this, I mean, looking at the technicals, everything is healthy. Momentum is pushing upwards as we recaptured that 50-day moving average around September 3rd. So that was a good start to the month as we make our way higher. And then we see we have this level of resistance up here. So as we are making our way upwards, we have to pay attention to the volume and the volatility that is being played. So I actually sold AMC options yesterday, and I'm looking to buy equities, if not today, when the time is right. So the biggest thing about trading is knowing your entry and exit points. So on the 4-hour, you see we got this little bull flag, right? It comes all the way down to test the previous resistance area, right? So this was previous resistance, and it came all the way back down to retest that area before breaking out of that wedge and solidifying the bullish move. Now you could also argue that this is a cup and handle as well, making that move. So it's really whatever you see with your eyes, right? So this is a cup, and then you got the handle, and then it makes a move upwards up to around what, that 48 range. Yep, high of $48.58. And then we have and you could argue this for a little cup and handle as well. And then it makes its move upwards. So on the 4-hour chart, the momentum is pushing higher, as it does seem like the momentum might cross to the downward side, but what you need to pay attention to is the long-term trend. So it's okay for a stock to have a pullback. So yesterday we actually had a pullback all the way back down to the previous day's close. Almost, actually. So the low was $50.35 yesterday, while that previous day close was $50.16. So pretty close to retesting that high from that day, which is good because we held it. And then hopefully what happens is we break higher upwards and we don't all of a sudden move downwards. We need this volume to pick up to be strong, right? Like, look at the volume back here. Now it doesn't take much to move this stock because of all the I guess players in it, right? With the short sellers and apes and Reddit traders, meme traders, whatever you want to call it. It doesn't take much to move this stock right now. All what needs to happen is buyers need to create pressure on the short sellers, and that is what has happened and all throughout this time period. Is sellers have been pressuring the buyers to really show their strength, as you have an inverted cup and handle here, right? And then it makes a move downward. So this is where exactly I would have got out when I saw this pattern form. I definitely would have got out as soon as that 9-day crosses the 20-day, showing that momentum is indeed going downwards. And then next, we have another talk, BBIG. So we are, we are actually down in pre-market, not by much, but it's looking like we are breaking support levels, maybe retesting. Maybe I was wrong with my support level, maybe we were testing something else, but you could see that yesterday we came down and tested that support level. So on the daily chart, momentum hasn't even caught up yet to this, which traders could be waiting for the momentum to catch up. But the MACD and everything, nothing is showing signs of a reversal at this point in time. But because of how crazy these stocks could be, I mean, that stock could, BBIG could dip way lower in a matter of minutes. So as you could see, that every time we pushed new highs in the pre-market, right, followed by a red stick, we kind of sold off. Now that was only one time. Now this is the only thing that's tough about 4 hours, is that like 1 to 5, okay, but then you got 5 to 9, and then 4 hours is kind of a mixture. So like it's kind of tough when you're looking at the after hours volume and data. So you could turn that off. I like seeing where things are going in after hours. So 4 hour, we touch this moving average 50-day, and we might hold it. It seems like we're holding it. So if we do hold it, then we have found our support level of what, 940, or no, what was the low here? Low is $9.20. So that would be our new support level. And if you want to break it down lower, then you would want to go to the hour. So when you break it down into the hour, this seems like this is support. So this could be a false breakthrough right now, as maybe short sellers are reloading on their positions, or maybe people are just selling the stock at this point in time, because we have hit a high of $12.49 there, right? And then since that high, we've been on the downwards trend. So this is definitely something that I'm keeping an eye out for, because I am actually down in my position, because I did think we were going to run higher this day. When we hit $12.49, I thought we would potentially keep on running like ATER. Can't be right every time. So my threshold is okay, because I don't over leverage myself when it comes to trading. And now what we're looking at is this to hold support and to make our way upwards as more buyers come in and hopefully create pressure for the sellers. So if we're looking at the daily chart, right? So the daily chart, obviously things are overextended. The RSI actually cooled off yesterday, which is a good sign, as the volume did come back down, showing the volume price is moving downwards. So we've touched one of the EMAs, but the trade EMA we haven't touched. So this is something that I'm going to be very mindful on. If we do break this, then we could be looking at testing $8, because we are at this previous high, or it could be not the low $9. Like we're at $9.41. Who knows how crazy the selling pressure could be today. I don't know everything, but I am knowledgeable in how to make money by trading. So got to be cautious with this one, because let's just say you get in here now, right, and it falls below the 9s back to previous support, the sole support down here that I had. Now if it goes all the way down here and you got in at $9.40, you're gonna be pissed that you didn't wait. Now you don't have to be the first one in, but you shouldn't be the last one in. So you just gotta know your timing and where prices are going. So before I sign off on this, CPI data came out, and CPI came in at 4%. As opposed to 4.3 and forecasted 4.2%. So missed by 2%, as CPI grew 0.3% from month over month, and year over year 5.3%. So nothing too crazy at that point in time, but inflation is obviously still here, and definitely going to be something that is monitored closely. As now, before I go, we got gold reacting to it, do we? I'm gonna go on the 4 hour real quick. So we actually did have gold react to it, and I'm gonna go on the 30-minute chart, because this came out at 8:30. So when this data came out, we'll be able to see, haha, look at that. So 8:30 we found support. You gotta love it, fellas. You gotta love it when you are right. So looking at the 30-minute time frame, we came down and tested that support level right as the data came out, and now you are kind of seeing momentum shift upwards. So I mean, we could cross 1800, so that is something I'm going to be looking at as the 10-year. See, the 10-year jumped extreme as the data came out. And I mean, inflation is inflation, right? So definitely going to look at this as we did cross over the 50-day moving average, but this could be a false breakout. I mean, it's pre-market, and you could see that the MACD did signal some bullish behavior there. But if you would like to zoom out, this might not hold because 4 hour it's testing that 200-day moving average. The daily is testing the 200-day moving average with a sign of a MACD trend reversal. And then as we pull out the weekly, we still have ways to go. So the fact that we did recapture the 50-day moving average on the weekly time frame, and we did make a way downwards in July, but now since the inflation data is coming up and everything, and the Delta variant and the Fed talks, we are seeing the support at the 50-day level as we are rising. So next is the dollar. Or I shouldn't say the dollar, I should just say the Dixie. So now the Dixie on a weekly time frame, we are forming a little upwards wedge, and we break out of this wedge, we're definitely looking at retesting that resistance level there. And let's look at the daily. So daily's here. I don't want to repeat myself too much, but the 30-minute time frame. So see, now inflation came out and Dixie dropped, and we're looking at what, $92 and $92,445 right now. So the fact that this dropped off like that, crossed over the 50-day moving average, so that is showing a weak dollar at this point in time, as gold pushes higher. So this is showing that inflation is here, obviously, and this is going to be an issue not only for the short term but the long term as well. 5.3% CPI year over year, that's pretty high. I would say if it came like way lower than that, I mean, it forecasted 5.3% though, so like it hit the nail on the head right there. And then when it comes to like core CPI, I mean 4% as opposed to 4.2%. That's not a huge miss, but what's funny is, like, I call the CPI the CP lie, and that's because it's a lagging indicator, because this is August's numbers and we're in September. And what I want to point out, see, gold is pushing higher, is 3M came out and specifically said that they are going to see high inflation. Well, they are seeing high inflation in Q3. So the fact that they're seeing high, they came out and said that, was it then? I think it was, but I could be wrong. Oh, it was actually yesterday that it said it's seeing inflation problems. So with it seeing inflation problems, I mean, that's a bad sign, but at least they're being transparent and letting you know that they are seeing inflation problems. So is that going to be a problem? I mean, for them, yeah, 3M is a sorry, 3M is a industrials company, right? So by them seeing inflation like that to export, import goods, and obviously materials and transporting things, that is going to be a huge problem for them to deal with, because the cost of everything is going to go up and they're going to pass that down to the supplier. But as inflation numbers came up, you could see that we found support at that low 186 number. So real quick, we want to come out here. Where was this last? So now on the daily, now we crossed the 200-day moving average, but the 50 is still up here. So this could be a false breakthrough. But what this is showing me is right now we have found support at that 184 level. But even though this is the daily, I want to look at the weekly, because the weekly, where it seems like we're trying to push higher, because I mean, March, we broke through the 200-day moving average, and now it seems like a golden cross was going to form to push this stock higher. So it might, I mean, inflation didn't come in extremely hot, came in as a miss. So that is something that I am being mindful about as things are starting to become more real, and it's just all about keeping up to date with it, because you fall one day behind, you might lose everything that you were looking at. And I mean that just in your head. I write things down a lot. So if we zoom in to the 4-hour, you see that, was this yesterday? Nope, the 7th, the stock just dipped, and I believe that was when they reported earnings. I could be wrong. No. 3M on September 7th. It was just I guess panic sell, because it closed below the 200-day moving average. So that makes sense why that went down, is because there was some selling pressure there, and it was probably because inflation was coming out, and you could see that we have heavy resistance at that level of 202. So I mean, who knows, in this environment, I mean, 3M could come soaring back, as the 4-hour is signaling a bullish reversal. So that's something to be on the lookout for as we are getting closer to the opening bell. And we do have futures, I believe, are up. Yep, futures are all up now, as the US 10-year is at 1.34 and the VIX is down as the dollar is down. And why isn't gold coming up? So gold futures are down slightly. Crude and Brent oil is up. And yeah, everything else is up. So CPI came in. Next, we have some job data, the weekly job data coming out Wednesday or Thursday. Thursday, we have the job data coming out. Tomorrow is just housing data and oil data and industrial production. So that is going to be pretty much just economy signals. So I'm probably not going to go over or touch anything on that. But right now, looking at everything, I could possibly see us doing exactly what we did yesterday. If we come in, for instance, let's look at this. We'll go SPX. So if you're looking at this right now, futures were supposedly up yesterday, and then they were, and then all of a sudden what happened was we opened and everything went down. So I believe the triple Qs was a good example of that. Yes, so you could see that we were actually rising yesterday, right? It seemed like we found support at this level of 376, and then what happened was we sold off, and we actually went lower than that support level to touch a new level of support, but we ended up closing above that, and now we're looking like we are going to push higher because of the inflation data coming out. But is this going to be a significant bull trap? Looking at it from a zoomed out position, yes, but could you still make money in the short term? Yes, the real short term. So I am going to be watching the NASDAQ, SPY, and Dow within the first hour, because if that happens and we don't pull back up and recapture yesterday's open or close, that could be a sign of still of a sell-off continuing, as futures will probably rise and then it'll be a bull trap. So that's something to be mindful about depending on what stocks you're looking at. Because if we look into the SPY, did the SPY do the same thing? Yeah, the SPY did the same thing yesterday. We sold off in the morning, held support at the trend line, and now we're consolidating upwards and we're at 448. So hopefully we recapture yesterday's open, and that'll be a good bullish sign if we close above yesterday's open to take back that little sell-off that we just witnessed the past 2 days? Yeah, really just the past 2 trading days or 3 trading days really. So that, or 4. So that is something that I am going to be monitoring today, and obviously that's that. So right now I see nothing but green, and don't forget, go long. Have a good day, everyone. Thank you.